everyone, good morning and welcome to the latest Bridging and Commercial Virtual Roundtable. If this is your first time joining us, my name is Karen Truder. I'm the Managing Director of MediaNet. We are online and print publishers within the specialist property finance space. And this is our weekly series of live sessions in which we partner with a leading provider and invite an expert panel to explore certain aspects of the sector. Today, I'm delighted to be hosting alongside United Trust Bank and three brokers who have extensive experience in the topic that we're tackling today, which is all about using bridging finance to acquire and fund refurbishment projects. The panel will shortly be introducing themselves, but I'm going to give you a quick overview of the subject at hand. Using bridging in this way is nothing new. However, it is benefiting from certain wider factors at present, namely a reduction in appetite for more traditional lenders, the new permitted development rights, and the stamp duty holiday in some respects. Bridging's ability to move fast means that opportunities in need of refurbishment can be snapped up quickly and work can commence with similar speed. Investors who are seeking to grow their portfolios and maximize their income may turn to property auctions for a good deal. Bridging has always been a perfect match for these cases, but it can provide the necessary funding to bring those properties to a mortgageable standard and onto a term loan as well. Reports towards the end of last year indicated a rise in owner-occupier properties being bought at auction, with some citing the reason for this being connected to the rise of online bidding, which made things more accessible, and it also carried with it the certainty of purchase. Many developers who are also responding to pandemic-induced changes in what we want from our homes and spaces are using short-term finance to fund these adaptations. We are here today to discuss why bridging might be favoured over other forms of finance, which of its hallmarks make it ideal for this purpose, and also what we need to be mindful of when using bridging for its refurbishment purposes. So first, I'd like to thank our panel for being here and invite you now to each introduce yourselves before we dive into our first talking point.
Karen, thank you. Good morning, everybody. My name is Becky and I work at United Trust Bank. I've been with the bank now for coming up to nearly 5 years. I originally started in the bridging team as an underwriter myself, and I then moved up into the role that I'm currently in as underwriting manager. So I've had a good experience of being able to appraise and underwrite the cases, and my role now is actually looking after the underwriters that we have in the team. So I'll hand over to Bruno.
Thanks, Becky. So Bruno Welch, Managing Director of Clayton Welch Associates. We're independent mortgage brokers based in London. Established in, well, became a broker in 2007, set up CWA in 2011, so we're 10 years old this year. We cover the full range of residential debt financing and also commercial. So that's the area that I tend to focus on now, and I work very closely with guys at United Trust Bank for a lot of my clients for bridging, refurbishment and development financing. So,
hi guys, my name is, Bruno. My name's Chris Oatway at LDN Finance. We're just coming up to our 4th birthday now in May. I head up the specialist finance division, and predominantly I deal with developers, so including obviously refurbished finance and bridging and commercial.
Hi everyone, my name's Paul Del Monte. I'm the key account manager for United Trust Bank, covering the Northwest and Midlands area. I deal with the property finance side, so the bridging, development and structured finance part of the bank. My job is to look after key accounts in Northwest and Midlands.
Yeah, good morning everybody. My name is Owen Bentley, and similarly to Paul, I'm a key account manager here at United Trust Bank. I'm based out in Bristol in the southwest, cover the M4 corridor and the sort of bottom half of the country, bordering up to Paul in the north and part of London as well. I'm an ex-broker turned lender, so I've seen both sides of the fence, and obviously now work quite closely with all our broker partners in all the sort of property finance division that United Trust have to offer.
Hi everybody, it's Sam at Crystal Specialist Finance. Thank you very much for having me. I'm the BDM, Business Development Manager at Crystal. I've been there, so this is my 14th month, so I've done the year hurdle, and I'm looking after key accounts within the Midlands and the North. Day to day, I deal regularly, and a lot of it is falling under that refurbishment banner, so I'm glad to be here today to help discuss.
Thank you very much. Again, thanks for your time and for joining us on this panel to share your expertise in this area. So we're going to jump straight in, and I'm going to come to either Owen or Paul for this first, but we'd love an overview of the refurb market and current trends that you're seeing in that space in particular. What are the strengths and opportunities? And if you could give us a quick précis of the auction market as well within that would be great to get us started.
Yeah, sure. You want me to jump in? You might have to just remind me of all those bits, Karen, as we go through. It's quite a bit to cover. But yeah, look, an overview of the bridging market and the refurb market. Bridging's come a long way, as we all know, in a large number of years, and the refurb market now is quite a dynamic and far-reaching opportunity for both individuals and developers and investors. I mean, over the last year, we've probably seen that trend increase somewhat as opportunities come through from maybe a bit of the closure of the sort of high street, you know, your retail and commercials things. I mean, that's sort of one end of the sort of the change of use where your refurb is quite a bit of a project. The auction side continues to remain strong. You know, a lot of people look for that sort of tart and flip, and that might be somebody who's just started to get into the game, been watching Homes Under the Hammer for I don't know how many years that's been running, but also your sort of more portfolio landlords who have got several buy-to-lets in the background and are leaning on existing equity to grab new opportunities that are fairly cheap, 100% finance opportunities, and put those into play, and then, as I said, either tart and flip or keep them into their portfolio. So bridging, I think, has always been a dynamic vehicle that supports that. You know, it's always been a short-term solution that can get somebody from A to B, where standard lenders or standard funding opportunities don't really exist or can't support. And I think, you know, the likes of the developments of certain products that, you know, like our residential improvement product, where you go from just a straightforward in and out into something where you're helping to support costs of works all the way through and get that sort of larger project underway is, you know, we've seen quite a bit of that. And again, you know, in terms of the sort of borrower life cycle, you might start with a small tart and flip, you then might go into a larger sort of change of use and sort of create a few flats out of a single unit that might be a bank or an old care home, which is common, we see at the minute. And that might lead you into the full development cycle as well, you know, where you then become a full developer, which I'm sure some of the brokers here would be able to touch on.
Yeah.
Anything
yeah.
you have?
Yeah, sorry. Yeah, just to kind of tag on with that, I think flexibility, I think that's a big one within this market, is that, you know, the ability to be able to have, you know, each case by case as a different kind of scenario to it and has a different background, and you've got different clients and things like that. Flexibility is a huge one. And just sort of touching on the opportunities within the market, you know, I've certainly been seeing, and as a bank, we've been seeing clients really just trying to make their money work harder for them, you know, and you know, for themselves. So whether that be, you know, acquiring like an ex-trading public house that where we normally see has, you know, a nice piece of land on the side of it, which is a beer garden, and I know it's sacrilege to think that people want to try and get rid of that and create something different in terms of either flats or an HMO. So people like to utilize the whole site, not just the actual property that's physically there at that precise moment, in terms of converting that to an HMO, you know, making use of that land to be able to generate further profit is something that we see quite a lot. And that goes hand in hand with, you know, non-working farms as well. You know, you generally see these types of securities having some kind of further profitability that clients are really utilizing. And I think with the auctions, I think with bridging really taking off, is that, in my opinion, you know, people aren't getting the return for their money that the banks used to give. You know, having a large pot of cash, you know, under the bed or sat within a bank account isn't working hard enough for them. So they're exploring other opportunities to be able to really make use of that money and create a more of a larger profit. And that's I think the reason why that's kind of really increased the market from the bridging side and the short-term finance side.
Thanks both. Becky, when the application hits your desk from an underwriting perspective, what are the themes that you're seeing, sort of common types of project that may be going through the refurbishment process?
Yeah, there is definitely a theme at the moment, and actually I've certainly seen of recent, we are seeing a lot more properties that are being purchased in auction, and actually off the back of that, those properties may be quite unusual in their nature. So with, I know we're going to be touching on sort of permitted development further down the line, but actually with some of the changes that have come into that now, we're actually seeing people looking at some more unusual properties that may have had commercial use previously, and they're now looking at the opportunities to convert that into some kind of residential accommodation, whether it's a single unit or whether it's flat. So we're definitely seeing that as a theme. We're also seeing a lot more in respect of both the light refurbishment and the heavy refurbishment side. So a lot of individuals that have now decided that actually that's something that they want to get into, and in conjunction with contractors that they've either used previously and have got experience with, they're working alongside them to actually now venture into new projects. So there's definitely more now in the marketplace in respect of these refurbishment projects, both on a small scale but actually on a larger scale as well.
Thanks a lot, Becky. Bruno, does your experience or your overview of the market echo what UTB are saying?
Absolutely, Karen. Yes, I mean we've with our clients we've utilised the heavy refurbishment product with UTB for many of our clients on a number of occasions now. And we find it, and the clients find it's a very, very useful tool to maximise profits and take advantage of those opportunities that are out there in the market at the moment. You're right. I mean, cash sitting idle is doing nothing. Technically, it's losing its value, if anything, due to inflation. So it's all about utilising those funds most effectively, and also from a cash flow perspective, because a lot of the whole development cycle for developers, it's all about cash flow pipeline of deals. So if we can effectively use that pot of cash that they have, and also we effectively use background security properties as well to go into the structure, into the deal. And I think Owen touched on it earlier. He mentioned 100% financing, which sometimes is a bit of a sort of a term that people think, can you actually get 100% financing? But if you're putting in background security properties, technically you can get 90, 100%, technically secured funding. And we found that is a very, very, very effective tool, like I say, for clients to maximise what they can do and to take advantage of the opportunities, really. So.
Thanks a lot, Bruno. Coming on to you, Sam, what would you say, how has bridging evolved and more to fit the purpose of refurbs? What are the things about this particular product that make it so suitable for this sort of project?
So, I mean, the dynamic and the flexibility of bridging is, it paves its way to be a fantastic product set up perfectly for refurbishment. And it's fantastic to see in the market the number of brokers that are getting involved in that side of things. I think they're understanding, I think there is a slight turn in the market for the amount of cash that people are sat on, and they're wanting to invest in the properties, that brokers are wanting to get involved more and more within the bridging space and educate themselves on that. So there definitely is, a turn there. People are more wanting to be educated. So, yeah, sorry, just remind myself of the question again.
I think it's just looking at how the product has evolved, and you're absolutely right. You bring up a good point about it becoming more mainstream in people's consciousness, and therefore they're thinking about it first rather than as a last resort. So I suppose you have answered the question in that regard.
It certainly has evolved in the fact that the products are becoming more flexible for your mainstream brokers that are used to dealing with more vanilla product types. They're becoming more understandable for those brokers, but also able to lend that as a solution to their clients.
I think it's interesting because, you know, I'd say 10, 15 years ago, bridging was almost like a bit of a naughty word. You know, people would say bridging and it was like, oh God, this is going to be expensive. That's the first thing that people would think of when you said bridging finance. And I think, I mean, obviously I've never been a broker, so I'm sure Bruno and Chris will be able to kind of guide me on this, but you know, that reaction that you would naturally get from a client, you almost don't want to bring it up. You almost want to look for every other thing that you could possibly do for the client, and bridging was almost like a last kind of resort form of lending. But nowadays, with the, you know, we've mentioned a few times, with the flexibility, with the keen rates that are out there now, yeah, with the no exit fees, you know, being more accessible, which Sam said before, education as well, another point that Sam raised there. I think again, I've not done my CMAT, but talking to people that have done, I think chain break is the only example within a CMAT qualification, when we all know that there's so much more that you can do with a bridging loan and a refurb product that can really help clients obtain their desired outcome. And I think that education piece is really key, and this is where a broker's involvement within this industry is absolutely key, because they're the ones who are speaking directly to the clients. They're the ones who are advising the clients and that have got access to all the lenders' criterias, and that is really, really important.
That's a great segue, Paul, to a question I have for Chris about the current appetite for this product out there in the lender market at the moment. Are there enough people funding these projects? Is the criteria suitable? Is it attractive for you as a broker and your clients right now?
Yeah, I mean, we've seen such a change over the last 3 years, the number of people just coming into the bridging space on its own. And then it seems to be a level or a step forward that they then move into refurbishment finance as well. And it's added risk, it's an added complexity, but there is a massive opportunity. And as you know, we've been saying, there's so many different elements or parts of bridging finance, and for different types of projects and different, you know, at the start of the project, the end of the project, during it, whether it's light, heavy, medium, there is a full range. You just need to know which lenders are good at that specific type of deal that you're looking for. And as Paul mentioned, the broker now in this sector has never been more crucial, or his role or her role has never been more crucial to the situation, and to assist the client in enabling them to do not just one project, because we all know those clients who are doing development don't just want to do one deal. They're looking to do the next deal. They're looking to maximize that leverage. They're looking to look if they can get a lender focused on loan to GDV, because their deal is, you know, so good compared to the rest of the market. They want to leverage that one up. So we have such a wide range of funding options available. The key thing is honing in on which one is the most suitable. But then again, even though the lenders have come a long way, the bridging lenders have really filled this market well, there's still a long way to go, because now with all the new rule changes and new planning laws that have come into place, it's actually becoming more complex. And now where refurbishment then turns into development finance, there's becoming a bit of a grey area. And a lot of those people who are trying to do the refurb finance can't quite cater for all the needs that you may expect. But if the deal size isn't large enough, it may not be suitable for the development finance lenders. So there is an opportunity for people to continue expanding what they can do and keep up with the market, because you know, airspace and so on it is going to be a place for the future. And whether that comes under refurbishment or development or a combination of both, you know, this is something that there is a shortfall in the lending market at the moment, where the certain lenders who can do it are certainly performing very well, because there's limited options there.
Can I just jump in off the back of that actually on Chris's comments? And also historically, bridging has been very much a kind of a one touch for that borrower. They, you know, once they've had their bridge, it's been repaid, you know, they're in their property, and that may be the last that we see of them. This is also now opening a doorway for clients to come back to us again. So actually, you know, if the product fits the need of that borrower, and actually, as Chris is saying, you've got people that are regularly doing this, and you know, and that's where they're making their money, then there is an opportunity for them to actually then become a long-term client of the bank, which is something that with bridging wasn't necessarily the case before.
That's a great point, and I'd like to explore a bit further to Chris's mention about the grey area and the light and heavy and grey. But just before that, Becky, if I can come back to you just on some of the nitty-gritty around the actual terms that you're seeing and that you're handing out, so to speak. Are there average term lengths that we're looking at when bridging is used in this manner? Average LTVs, LTGDVs?
Yeah, sure. I mean, and probably if I'm looking down, I'm sort of just referring as well. So yeah, I mean, typically the term is up to 18 months on a non-regulated facility. You know, there are instances where we have looked at regulated, but we are then capped at 12 months on that basis. But if I can use the term of up to 18 months, that's providing that borrower with ample time to undertake the project, and in some instances there may be the need to obtain planning, so there may well be some timing factored in there to obtain that planning. There's then the time to actually undertake those works, and then a time scale to either sell the property if that's the intention, or look to secure the relevant refinances method of repayment. So we typically see sort of an 18-month as a term for those kind of deals. Talking around sort of loan to value, loan to GDV, you know, we can, as Bruno touched on, looking at funding potentially up to 100% of the works if there is supporting security behind that as well. So you could be looking up to sort of 70% of a loan to value, and then again looking up to 70% of loan to GDV as well. So there is some real flexibility there for those that may have been used to you know, lower thresholds in more of the mainstream banks historically.
Thank you. Owen, I noticed that I was reading through a few case studies in this vein that UTB have completed on, and it seemed that a recurring theme was the importance of the applicant talking to you prior to making that bid or committing to that property to talk through possible structuring of finance for that. Is that the case? Would you always encourage that to happen?
Well, I think it sort of touches on what a lot of people have been saying here. You know, every refurb project is different, and the market is changing, the opportunities are changing, and you know, experience is a key buzzword, isn't it, in terms of when we're looking at these things. And you know, in terms of the broker market and the lender market, you've got quite a bit of choice there. I mean, I would say that's again harping on with the point about the broker value in the market. Absolutely, you know, if this is the first time you're doing anything, and whether it be refurb or playing a new sport, you know, you're not going to go in without some kind of sounding board or some kind of learning curve in terms of trying to work out where you are, where the risks are, where the potential pitfalls are. You know, speaking with an experienced broker up front, right from the get-go, is going to give you that. You know, so if you put that into a case example of someone going to an auction, who's never maybe sat in an auction house before, an auction room, or not really knowing what they're doing, not really understanding what the lending potential is, or certainly what the cost of works are, maybe if they're going to retain that and rent it out, what the potential rental value is, how the buy-to-let market works off the back of it. So yeah, absolutely. Look, it's sort of almost imperative that you've got a bit of grounding in looking what you're wanting to do and making sure you're speaking with professionals who can sort of help guide you through that. You know, Becky touched on it before with the flexibility. Not all refurbs go well. There are errors. You know, people get things wrong, and we're not all here to say that every time we look at a deal, it's perfect. Flexibility is a word we've said a lot, and that's something I think from the lender partnership, you know, the broker and the client need. You know, in terms of the project, you can try and underwrite and learn the risks of exactly what you're looking at, but things might change as you go along. There might be things you might not have foreseen. You know, you might take a wall down and realize that actually the people who've done a bit of works beforehand haven't haven't done something properly, or you might have to spend more money rebuilding something. So yeah, there's a lot of ways and means that you can get caught out, and I think all in wrapping that in, experience, or at least having the ability to speak with a professional partner to understand where it is and what you're going, and working with a lender that's going to give you that flexibility to try and go with the deal as it may change is imperative.
Thank you, Owen. Bruno, just again tagging onto something Owen's mentioned about having knowledge of the term market, as this would be in most cases the exit route for this sort of bridging. How clued up are investors right now, and how much again, how much work is going into it from your side as a broker to making sure that it goes the whole way through?
Yes, it's a very good question, because the exit is with any bridging product, whether it's just standard bridging, regulated, heavy refurb, etc., and development, ultimately at the end of the day, the exit strategy is vital. And we always ensure that, as part of the requirements, for UTB and any bridging lender, you need to know what that exit strategy is up front, even before you complete on the bridge, because you don't want to get stuck on a bridge, because that could be potentially economically horrendous. So we always make sure we've got at least a plan A or a plan B, or maybe even a plan C for exit, because that's to give that level of comfort, and that's what we always provide for clients. But yeah, the exit options, if it's not sale of the asset that's been developed, are we looking at, I mean, we have a lot of clients that create multi-unit buildings, so single freehold multi-units. So they look to, if they want to retain those into their own portfolio, which a lot of them are doing now, we can arrange that NUB refinancing. Or if they're looking to sell, we can obviously, we're not estate agents as such, but we can sort of look to give them advice. And I think what a couple of guys have mentioned, I'm sure Chris will probably agree with as well, it's keeping in contact and assisting the client, and also the lender, because things do go wrong, as Owen mentioned, sometimes with development projects. It's knowing who you can come and speak to, that professional advice that the likes of Chris and myself, etc., can provide as the brokers, because we have that experience around us to do that. But yeah, I mean, like I say, the exit is all down to the requirements of the developer at the end of the day. And I think also, experience as well is vitally important, because we've had quite a few people come to us thinking, like, they've never done development financing before, but they thought, well, the heavy refurb or the refurbishment should be okay, but you still need a level of track record and experience to do that. It's not straightforward. And also the exit market as well at the moment, even with buy-to-let products in general, it's not a straightforward market like it used to be anymore. There's a lot more involvement. The lenders look at plausibility in the background, the landlord's personal situation away from the rental income of the portfolio, that kind of thing. So it can be a real minefield at times. So again, speaking to a professional broker to assist with that I think is vital.
Thanks, Bruno. Sam, do you have a similar sort of experience whereby you've got clients perhaps blurring the lines between how simple or how difficult these projects might be, and having to manage their expectations very closely as a broker?
Absolutely, yeah. I mean, it's day-to-day basis. You will have your first-time developers, first-time bridgers approaching their mortgage broker that may not be as experienced as Bruno and Chris, but maybe more in the more vanilla mortgage market. And you're absolutely spot on. You need that experience there behind you to be able to understand that market. And that's where we really come into play. So day-to-day basis, it is a case of, they are in the auction room, they're going to the auction room, they've been watching Homes Under the Hammer, like you said, and they're not maybe fully understanding the potential minefield that auction room could bring. And touching back to the other point in getting a bit of confidence there, we're regularly seeing that they've not necessarily made that commitment to the property just yet, but they need to have that upfront conversation, even if it's just to provide them that extra bit of confidence that what they're doing, A, is the right thing, B, that it is a good solution, a reliable solution, and C, the worry with the exit strategy. It's a massive thing at the moment, and I think it is what gets brokers flustered in making sure there is a potential exit strategy there. Refurb to let is coming into its elements from that respect. We're seeing an increase in number of brokers actually picking up the phone and inquiring directly into refurb to let, because they want that extra bit of confidence that that is available to them for the single underwriting, get the one product and secure that exit when they're ready to do so. It's certainly not as big a product as we would have expected just yet, but it's certainly on the increase.
Paul, as a key account manager at UTB, you're obviously getting a lot of proposals coming to you for different projects. This exit issue is critical, and it's across a number of different products in the market at the moment. It's certainly not distinct to this particular use, but what are you seeing in the majority that people are wanting to use as an exit? How do you treat that? Do you think that we're in a bit of a precarious scenario here with mainstream lenders' appetites being quite uncertain?
Yeah, I think you've just, every case, obviously case by case basis, but we're seeing a lot more of properties taking a little bit longer to sell, for example. The increase in development exit recently is a perfect example of that. So where you've normally could get a bill done within 9 months, 3 months to sell within a term of a development finance facility, at the minute it's probably taking, I'd say, six to 9 months to sell. So then you always need that additional buffer on the back end, and that is just where the market is at the minute. Obviously, that's why development exit bridging at the minute seems to be a bit of a hot topic. Bringing it back to the refurb side of it, again, we have to be careful, especially with like regulation, for example, where you're limited to a 12-month term. So if you're doing like a refurb, a heavy refurb, you have to be mindful of the works that you're doing to that property to be able to, is there sufficient time, to exit on the back end? Is there enough time within 12 months to get out? So it's always on a case-by-case basis. And I just think sometimes when we get those cases in, just going back to your original point, before they go and approach an auction room, it's important to sort of understand, and this is again where the brokers come in, is that understand whether that's realistic or not, and whether there is an exit that's viable within that term, and if not, then is there a backup exit to be able to help exit that facility.
It's been reported that there's slowness in several parts of the process at the moment. Planning is something that I think can get people tripped up a bit, how long that might take and how it factors in. Becky, can you maybe talk a bit to how would you prefer, does UTB prefer planning to be in place prior to an application? Under what circumstances would you take something subject to pre-planning?
Yeah, thanks, Karen. Our ideal world, if planning is already in place, then we absolutely know what we're dealing with in respect of the project. That allows the borrower then some more accurate figures in terms of the costings of that project. It means that actually when we're undertaking the valuation on that property, that actually the valuer has got that physical planning there to work with to be able to then provide you with an accurate GDV once those works are complete. So yes, in an ideal world, to have planning in place, that's preferable, but actually, there are times, and there have been examples where actually, if we've got somebody that's experienced, that's come to us, that has sourced a property, that there's a likelihood that actually that planning is going to be agreed. It may be that there's been pre-application meetings already, so there's a fair indication of whether that planning is actually going to be agreed and what that planning is going to look like. Then yes, of course, it would be something that we would look to review. Again, it does come back to, as we've touched on, the viability of gaining that planning, undertaking those works, and then being able to get out of that bridge in the term of that loan. So that's something that obviously we would need to take into consideration. But again, it comes back to the flexibility of these products on the basis of is there planning agreed, or actually is planning likely to be agreed, and can we look at both examples?
I think that's where refurbishment stuff has really taken off, hasn't it? It's just because it's basically that ability to acquire a property, maybe having that pre-planning in place. And again, it just gives the clients another option. You know, it doesn't mean it's a closed door just because the planning's not signed, sealed, delivered. It's there. We've got, you know, an experienced client. You know, the pre-planning discussions have gone well. The ability to be able to provide finance for the acquisition and then move maybe on, you know, onto a refurb product where we provide the cost of works is just something that again is another reason why this refurb market has really sort of increased. Is again, it's just that ability to move from one product to another within that term. You know, it's great.
If you can fund the project pre-planning, it means you can then take advantage of planning uplift in value, because once you've got the planning granted, then it gives you a greater profit margin at the end of the day. So I just wanted to add that bit in there from what Paul was saying. So sorry, Owen, apologies.
Yeah, no, there was. I think there's a delay on this mute button, but no, I was just going to add. I mean, I think that's really where bridging comes into its own. I mean, you're talking about planning. I think in the last 12 months, you know, these delays that we've been seeing from people working from home and normal processes being delayed, you can't control that. So actually, where bridging really comes into its own is, what are you trying to do here? And it might be that bridging steps in and helps you with the acquisition of a security. There might be a primary goal here to apply for planning, and once you get the planning, then convert that into a refurb. But you've got to look at the what ifs, and if the what ifs is you're buying, say, a standard residential security, well, actually, if planning doesn't come through, that can morph into something different, and you can pull out of that bridge via a buy-to-let refinance, and you can sit on it for another 12 months, rent it out for a period, go for a planning gain, or, you know, a lot of these planning, even when you get the planning, you're sort of going back in for changes and things. So bridging we use this word flexible all the time, but it's exactly what it is. You know, it's designed to help the client get from A to B. And now A to B might not be a straight line, it might be a clunky, bumpy journey, but that's not to say that you can't get the finance to help you with stage one of that. And then as planning might come through, you know, that might change into something else. So we see a lot of, you know, they're called holding bridges or acquisition bridges, where you're buying something now that you're planning to do something with, but it might not be in the immediate future. You know, it might be a security at the minute that's currently tenanted, might be tenanted for another 12 months. You might be going for a planning gain in the background, and if you can get the tenants out within that period, then convert that into something else. So, you know, don't be put off, I think, by saying we haven't not yet got planning, or we're going to go in for planning, we're not quite sure when it's come back, because bridging can help with all different stages of that. And that's the beauty of looking at the whole deal and the whole client with regard to not just the acquisition security, but of course background securities, buy-to-let refinance of background portfolios, or capital raising here, or bringing main resin. You know, it's the whole thing is designed to look at everything you've got and make the deal almost fit to what you're trying to do, which I think is what we all try and do at the end of the day. So,
and then chuck in that you can raise 100% capital. Mind blown. You know, it's, you know, being able to cross charge over multiple securities and doing that is you know, it's great.
Yeah, and it's not always just first charge, is it? Because you can do second charge bridging as well. So there's advantages to be had across the board, subject to the structure of the background portfolio and other, you know, background security assets that may be available to put into the mix.
And in all of this, we also need a rebridge a lot of the time, because as everyone has experienced, the councils are not the most efficient people during lockdown. You know, they take their time to do anything. Again, any decision takes way longer than it should do. And this can happen at the front end and at the back end when you're trying to get building regs signed off. And that's been a massive challenge for a lot of people. So it's not just doing the pre-planning acquisition bridge that you might need. You might need the rebridge in it, the refurb finance, and then the development exit at the back end. So you've got like 4 different bridge products all in one, just for one potential deal.
Chris, while we're on you, would you mind giving us just a little breakdown of the differences between the types of refurbishments that we commonly classify? So light, heavy, and then when it starts getting more into an actual development loan.
Yeah, I mean, we all see the sort of small developer or first-time developer or someone who's getting into this sector who might be buying something at auction, and we'll see it as a doer-upper, and we'll give it a quick paint job, do the kitchen, do the bathroom, and then sell. And then, you know, they tend to advance from there. And the moment you start moving walls around, it starts moving out of light refurbishment into medium, and some people would say heavy, or when you're then doing extensions, where people might call it light development, but they're still able to do it as a bridging lender, because if it's a rear or a side extension and it's part of a simple planning process to achieve it, then or a permitted development, then anyone who has got little experience could still take on this and still have a wealth of options available to them from the funding market. Where it blurs probably is when the loan amount starts becoming a much larger percentage that's allocated towards the development part of the facility than the acquisition part. And once that starts happening, it starts leading into it's more of a development project. Also, the more works that are required, it's likely that a quantity surveyor will need to monitor those works. If you're doing, a bathroom and a kitchen and a paint job, I don't think it's going to be worth paying someone £1,000 to come and visit and check that you've done it properly. But the moment that things start getting a bit more technical and you need to bring in different professionals around you, then the monitoring becomes incredibly important. But yeah, beyond that, then you've got obviously office to resi conversions, which certainly don't count as a refurbishment, but you might not be moving walls as such, but because you can sort of knock them through, you're actually just putting in the walls in the first place. And I would say that would definitely come more under the development expertise rather than a bridging lender, although some bridging lenders can certainly can help on that as well.
Thank you, Chris. So Becky, just to clarify then, is there any part of the new permitted development rights that is fueling this part of the market, so refurbishment applications coming in?
Yeah, I mean, I think, listen, I think it's quite exciting for people, the changes, and actually, we all know this is about trying to keep the housing market stimulated, but also for people building upwards rather than outwards, which in turn has an impact on other things, greenbelt land, securing people's gardens, people not then digging down into basements, which actually in itself is quite complex. So yeah, I definitely think people have sat up and taken notice of this and are looking at ways of utilising that with either properties that they've already got, or actually it has then an influence on the types of properties that they're looking at purchasing moving forwards. So I definitely think it's having an impact, and I think we are starting to see more of those types of deals coming through the doors. Again, it can obviously sometimes bring with itself, other challenges, because obviously if you're building or extending on existing, you could be inheriting underlying issues, of that existing property, but then that all comes down to the professionals that you've got around you when you're actually undertaking these works, and making sure that you've looked into all of those, that you factored them into your costings, that you've got contingencies in place for any unforeseen issues that may come up. So I definitely think it's having an impact, but actually the way in which that we look at those deals, it doesn't change things as such. It just means that it's perhaps a different type of refurbishment that's coming through the door.
Thanks a lot, Becky. Bruno, would you agree with that? Do you think that as well as perhaps the stamp duty holiday and some other stimulus from the government as a result of the events of last year and ongoing is contributing to this market being very busy?
100%, yeah, absolutely. I mean, we've certainly seen use of more sort of standard bridging as such, regulated and unregulated, for say chain break deals, or to get things done more quickly, because when obviously the first cliff edge, as I call it, with the stamp duty holiday was looming, getting held up, and they needed the bridging finance to step in quickly and sort of allow them to effect the completion as such. But also, I mean, like I said before, with our developer clients that do the heavy refurbishment, then again, it's all about taking advantage of the opportunities out there at the moment, and the bridging finance is very quick, compared to standard mortgage, which is taking a lot longer at the moment. Also, because of the complexities of the general pandemic market within the jobs market as such, which obviously has a knock-on effect to the residential market. which obviously also has a knock-on effect to the exit for the bridging sometimes. So you have to be quite careful about how you're planning the overall structure of the financing and the project itself. So, but yeah, overall, it's certainly the bridging product, heavy refurbishment, have certainly picked up recently, and throughout the pandemic as well. I have to say, we did a lot of regulated bridging with United Trust Bank last year for various reasons. But yeah, it's a great product for the right type of client, because again, it's all about experience. Because even some of these heavy refurbishment loans, the client still has to have some experience. You can't just go into it on your first project. You have to have a little bit of experience. As Chris touched on earlier, clients, sometimes we advise clients to go into a smaller project, i.e. don't run before you can walk type scenario, because whilst there are products out there for first-time developers, but you will pay through the nose on the rate, to be honest with you, because it's risk-based lending. So if you've got that track record, then you're going to get the better terms, better structure, better deal basically at the end of the day.
Thank you. Just onto a borrower profile in this market and whether that is changing or shifting. Owen, can you talk a bit about whether you're seeing more first-time or homeowner, kind of owner-occupier type applications in this space, or if we are still looking at a largely professional investor sector?
We touched on it earlier. I think everybody wants any money they've got to work as smart as it can, and in the last year, I think people have gone through some pretty tough changes in certain circles, and property has always been an opportunity for investment relevant to the market. So I think last year, yeah, absolutely. Have we seen more people looking to dip their toe into what they've always maybe harbored as maybe a hobby project or something that they've always fancied getting into? Yeah, we have. It's been interesting because we've touched on experience here, and unfortunately some people don't have any transferable experience, and it's not something you can really just go straight into, even maybe at the auction purchase and the sort of light flip and refurb and flip. But I would say in terms of the professionals, yeah, again, there's a lot of opportunity out there in the market from an asset based. We talked a bit earlier about maybe the high street changing this year, care homes, retail, commercial, maybe not being as open as it once was. And what does that present? Well, under PD, a lot of this stuff can be converted to residential. So if you've got, again, from a property professional point of view, the background portfolio, the assets you can lean on, you can come in and grab these things quick, grab these things cheap. You can fund 100% of the purchase and potentially 100% of the works. And you come out of the tail end of a successful project, not only with a security that is hopefully appreciated in capital value, but also then might be generating additional return for you on a rental side. Or you might be looking to put that back into the market. The housing market, as we know, there's a constant demand for new homes. So I think from a lending perspective, yeah, great that we've seen all these sort of different people looking to come to the market and take advantage of different things. That's where I guess we lean a bit more on the brokers, as we mentioned before, in helping those people sort of guide them through the opportunities and what they might be looking at and how that might work. We obviously are one lender out of our spectrum, and Bruno touched on it before. You've got very competitive pricing and very high pricing based on risk. So sometimes there is an option. So it's not necessarily a case that no experience means no deal. You might have transferable experience. You might be builders. You might have been doing this for your own clients for 30 odd years and now trying it for yourself. So I think in all of these opportunities, it's just worthwhile really understanding who the borrower is, what the project is, and what they're looking to do in terms of support.
Paul, is there anything you'd like to add to that about the types of borrower we're looking at right now?
Yeah, Owen's spot on. It's that we're seeing a lot more of clients looking to venture into this kind of market. And I've certainly seen this year a lot of like JVs with siblings. Whether that could end badly or end really well, I don't know. But it's a lot of people where they get inheritance, for example, and they want to go in and get into the property world. And like we've said a couple of times before, it's pointless really having your money just depreciating within a bank account. Invest it into property. People like to, well, certainly in my experience, people like to see their money. It's like driving past a property, you own that property. It brings a kind of comfort. You can touch it. It's your money. That's your inheritance. That's what clients are looking to pass on to their like kids and grandkids and things like that. So more and more people are looking to venture into this. And the main difference that I've seen between your regular property developers and your first timers are a lot of experienced property developers have a portfolio, whether it be a small portfolio or a large portfolio. Generally what happens is they have additional equity to put into the mix to be able to raise the capital. They use additional security as deposit, as opposed to where someone who's maybe new to this kind of part of the market come in with just cash as a deposit from an inheritance or from a a payout on a pension or something like that. I think that's the difference really that I've seen. So yeah, that's my thoughts on that.
Thank you, Paul. Sam's video has disappeared for some reason. I apologize for that. But Sam, can you hear me? And I'll come to you next for the next question.
Yes, I can hear you. Can you hear me? Sorry.
Thank you. I'm not sure what happened. You just disappeared, but we can hear you, which is important. So I just wanted to come to you. We've only got a few minutes left, but I wanted to understand from you and from Crystal's point of view, if there are any other bits of advice that you might like to impart to those who are considering taking out this type of finance, a few more of the kind of do's and don'ts around it that you might like to share with us.
Yeah, absolutely. I think it all goes back to the experience piece as well. If you aren't experienced in the bridging world and the refurbishment piece, then I would make sure you are surrounded by experienced individuals, and that being your financial advisor, down to your accountants, and also, yeah, just having that backing there really. For those brokers that do need the extra pieces of advice, and obviously you do have firms like ourselves in the industry that are the go-between between themselves and the lenders, and have that further backing with the experience of using UTB. So it does all evolve around that experience piece. There's a lot of people wanting to get themselves involved in the refurbishment piece. There's a lot of people sat on cash at the moment. As been mentioned before, it is depreciating, sat in the bank, sat under the mattress. So just make sure you do have yourself surrounded, do your research. Don't just turn up to that auction house and bid on the first thing that's there. So yeah, just making sure you do have the experience and the research in place before diving in, I guess.
Thank you very much, Sam. Becky, just off the back of that, really quickly, and also a question that's come through from the audience: how much do you look into the team that's around the applicant? So whether or not they have experience in the matter, do you look at the team of builders and contractors that they have around them for this type of finance as intensively as someone might do on a full-blown development application?
Yeah, so there is definitely an element of needing to be comfortable with certainly the borrowers, but as Sam's alluded to, the team of individuals that they've got around them to help them get this project completed. Certainly on some of the larger scale projects that we would be involved in, some of the heavier refurbishment, we have asset managers that would be going out to site to actually meet with these individuals, meet with the contractors, walk the site, understand what's going to be done, timescales, what experience have those individuals had of this type of project, what experience have they had previously. So whilst we're not necessarily at a quantity surveyor level for that type of research and understanding, there is definitely a level of due diligence that we would do around those individuals and the team that they have on site that are undertaking that project. So yeah, but again, that's something that we work with the borrowers with. Our asset managers are very flexible in regards to actually going out to site, meeting those individuals at times that are convenient for the contractors, so that it works for all parties involved and that we can get ourselves comfortable with what's being proposed.
Excellent. Thank you very much, Becky. We've just got a few minutes left, and I'd just like to hear everyone's final thoughts on this topic. Sam, if you can still hear us, we'd love to just get your final comments on the topic.
Final thoughts are, you know, it's a fantastic product. Don't shy away from it. Yes, bridging can by all means be a little bit of a minefield, but going back to what's previously said, if you've got that experience behind you, do your research. Your solicitor is also the other one that I wanted to mention, is making sure you've got a good solicitor behind you that is experienced in the bridging field, because that is regularly where we can see a lot of delays. So yeah, don't shy away, just make sure you have got that backing around you, and if you need that additional experience, approach a mortgage advisor that has got it, or alternatively a packager that's got the experience between the mortgage broker and the lender themselves.
Thank you very much, Sam. And again, sorry, I'm not really sure what happened with the camera, but we've got your expertise on. Coming to you, Chris, what would you like to leave us with today?
Something that no one said so far. Yeah. Well, I know. Picking up on something Bruno said earlier, actually, we've seen a big change where people are rather refurbing and selling immediately because of the market conditions. A lot of people have decided to hold, and this was pre-COVID. You know, a lot of people were holding on to their assets and keeping it in their portfolio and enhancing their rental income. And this can be done in numerous ways, and co-living hasn't been mentioned today as well. I know HMOs has, but this is an area where we've really seen some growth, and many deals are coming in where you know, the primary target of that development is to rent out those units, and there's no specific limitation to the number of units that could be converted, but it's more the amount of spend on the development as whether it fits within the bridging or the development sector.
Thank you, Chris. Appreciate that. There was a couple of people from the panel, a couple of audience questions were bringing those points up, so thank you. Bruno, over to you. Final comments.
Okay, so I suppose I'll sort of finish with the fact that I think as Owen mentioned earlier, you know, the bridging is not the sort of the dirty word as such that it used to be historically, and you know, clients aren't so frightened by the word bridging anymore. I don't think you can't hear that intake of breath when you mention bridging finance as an option now, because of the type of products and the breadth of, you know, products that are available now. It's a much better product proposition overall now. Yes, you need experience. Yes, you need the right team behind you. I'd say ultimately, yes, you need the right broker behind you as well, to provide you with that advice, because the market is it's full of bridging lenders, whether it be institutional lenders or private equity lenders. You know, there is a raft of lenders out there, and it's knowing which of those lenders is the right fit for your client, because every client's situation is unique, as we've all sort of mentioned before as well. So, but yeah, I think there's some good opportunities out there, and bridging finance and heavy refurbishment financing allows clients to maximise those opportunities at the moment.
Thank you, Bruno. Owen, coming over to you, and if you wouldn't mind including some detail just very quickly around the rates for these products, because we've had a few audience members write in just asking for some indicative rates for bridging for refurb.
Yeah, sure. Well, I'll just touch on the rates first then, I guess. I mean, it's hard to give you specifics on such a wide varying topic that covers everything like medium, heavy, experience, non, you know, change of use, etc. But I guess if you came to us with a light refurb, it was fairly straightforward, then you're talking around 0.5% a month at your very sharpest edge. If you're talking maybe a bit bigger developments and it's a bit of a sort of riskier, sort of higher LTV, then that can go up to your sort of 0.75 a month and sort of 9% per annum. So anywhere really within that catch rule. I mean, you can go a lot higher than that. You know, there are rates out there with snow on, as they say, but you might want to just have a look at that in terms of what that might do in terms of your return on profitability in the project as well. But look, I guess in summary, thanks to everybody, and I hope everybody's enjoyed it. I think from our seat, maybe on the bank, I would say, you know, bridging is easy to a point. You know, you've got a rationale, you've got a project, you've got assets, and you've got an exit. If you want to break it down as easy as that, don't be scared of it. It's there as a product that's designed to help you get from A to B. You've got professional brokers, you've got lenders who are there. Everybody wants to do the deal. everybody's got an investment in that deal being a success. Do your homework, come to the table with your numbers, but use us as a springboard to try and get to where you want to be. And I think, you know, there's a lot of successful and repeat business out there that you can grab as an opportunity, whether it be a small auction purchase, tart and flip, you change of use, you're buying a large house, making flats, and you go right up to what Chris was touching on with your co-borrower and your sort of big, more structured finance. And you know, there are lenders out there as well that can do everything from bridging through to the sort of more chunkier structured finance things and right through to your full development finance. So if you think from a relationship point of view, you've got yourself and your broker, and you can go all the way through then as you develop and get more experience in the sector.
Thank you so much, Owen. Closing remarks from you, Becky?
Yeah, thank you. Listen, I think it's an exciting time. I think that it's great that actually bridging is out there doing something slightly different to the usual kind of bridging product that, you know, we touched on when we very first opened up this morning. So yeah, I think we've moved with the changes that have moved in the marketplace. You know, be that PDR, stamp duty holiday. So I think it's a really exciting time for people now that are looking for something that really fits their needs in terms of the refurbishment projects that they're looking to undertake. So yeah, thank you very much for having us this morning.
Thank you, Becky. And finally, Paul, what would you like to leave us with?
Yeah, just again, repeating what everyone's kind of said, really. I think the main points for me are stick with your broker. You know, they've got the experience and understanding of, you know, all different types of criterias. You've got, you know, some lenders will charge exit fees, others won't. You know, some lenders will need a QS, some won't. It's important to kind of, you know, take a case by case basis, allow the, you know, the brokers to be able to work through what's best for you. I think as well, we've talked quite a lot about experience on this call. There's also situations where refurb doesn't really require experience. So whether it could be just like a light refurb, a little bit of a, you know, sort of paint and a lick of you know, TLC really, to be able to increase the rental, you know, the rental and appetite as well. So it becomes more, you know, people like the look of it. It looks a bit smarter, a bit cleaner. So things like that, really. Just, it's not always about experience. It very much does depend on what type of the work you're doing to the property. But again, that's where, you know, a broker would advise you, or ourselves, we would look at the schedule work, schedule cost. It's quite important to have that really from day one, for us to really sort of underwrite it accurately. You know, the last thing you want to be doing is saying it's only a light refurb, and then you're going up in the loft and outside the title plan, everything else, and it becomes a bit more difficult. But so yeah, they're the main points really. I echo what Becky said. It's an exciting time. You know, the flexibility is, you know, a big part of this. And don't be scared of it. You know, don't feel intimidated by it. You know, everyone, we're all here to help. You know, and help you achieve those dreams of you know, living in that beautiful house, or be able to step into the property market. So so yeah, we're all here to help and assist. So and again, thanks for having us this morning as well, Karen. Appreciate it.
Thank you, Paul. And I think it was a very useful discussion, especially for the uninitiated. We covered a broad range of things to do with the product. I thought it was a great discussion. Thank you so much to all of you for sharing your time, and to everyone who tuned in as well. We had an amazing amount of people join us, so it's very exciting. It's obviously an area of interest. So thank you for joining us. We will log off very shortly, but if you do want to catch the recording and a few of the highlights from this particular session, we will be publishing that on Bridging and Commercial next week. But that just leaves me to say have a wonderful day, and thank you so much. See you soon.